Good morning, good afternoon, good evening to wherever you are in the world. Welcome back to another episode of the Coffee Hour. We have some news coming out today. All right, we're going to be covering some new funds that have launched and just launched, actually, or that are launching. Two from Kurv that I think are going to be really interesting. We also have one from BlackRock. All right, so we'll be covering that here in just a moment. We also have Micron earnings that we're going to be going over as well. And we have the Fed, all right, the Federal Reserve, Jerome Powell having his press conference today and basically holding rates steady, but we're going to watch that entire clip, all right, so we can kind of gather what's happening. Unfortunately, I didn't have a chance to go over the press conference that actually happened after that, where Jerome Powell takes questions, because some of those questions are really, really good, and it gives us more insight into, what, kind of the mastermind that is the Federal Reserve. So more will come out, right? I'm sure we'll get, the meeting minutes probably later next month or something. And it'll be interesting to hear what the other Fed members are thinking and what they're talking about. So today's going to be really interesting. All right. So I hope you guys enjoy the stream. As always, it is greatly appreciated. I do appreciate your guys' support. All right, guys. Let's get into this. So I do see we have one member here already. Oh, we have two. All right. We have JVMZ early today. Hey, welcome. All right. Appreciate you being here. And we have Sean in the chat. MU up. Absolutely. And it's actually been rising a lot, last I saw. Wish I bought the dip, but, maybe I should have. Maybe I'm trying my best not to just, YOLO into these stocks over here. I'm trying my best to, practice patience. All right. That is the goal for me for this year. Even though I just bought ONDL, which is a Defiance 2x long for ONDAS, I already exited, took my gains off, but it does have earnings coming up, so maybe I'll hop back in and collect some of those juicy gains as well. It was a nice, I think, 17% gain that I took, or I can't remember. I got it. It was up to 21, but I was hoping we weren't going to have this sell-off that happened today, but it sold off anyways. Okay. Anyways, guys, appreciate everyone for being here. Let's get into it. All right, let's get into it. Let's get into the stream. Okay, cool. So as always, welcome back. Let's take a look at the S&P 500. We have been chopping down. We are down 1.36% for the day. All right, that was a big move down. And again, we already knew that the Federal Reserve was not going to lower rates, right? We already knew that. This was starting to sell off in the early morning in the overnight markets. We started to see that, the S&P 500, a lot of companies were starting to trend down. And, trying to figure out what the heck is happening. Could it be the Iran conflict, maybe? What came out from there? I was scouring the news, trying to find out why everything was dropping. We did have the Iran government basically make an announcement warning Saudi Arabia, Qatar, and I believe the UAE that they should evacuate, a couple of their refineries, a couple of their energy infrastructure facilities, because the United States had dropped, some ordnance, or Israel, I think, is one of the two countries, dropped some ordnance on Iran's depots, and basically they're going to do a retaliatory attack. So instead of attacking the United States, just attack the energy infrastructure of these partnering countries. So that was not good, right? That obviously was not good. We also had, some numbers came out. So inflation is running a little hotter. But anyways, like I said, a lot of stuff going on. Market did not like that. So the market ended up selling off, year to date, 3.41%. But you guys can see this trend, right? I know this is a very, crappy chart here, but you guys can start to see this trend, and I really do think we're heading much lower on the S&P 500. It's going to be probably a grind lower scenario. I don't know if we're going to have like that Liberation Day, dramatic 10% drop and then a 10% up over the next day or so. I don't think we're going to have a sharp V-shaped rally like we did last year. I think this is going to be a grind slow to the downside over these next couple of months. So, I mean, that's, the silver lining to all this is that, this will present some good opportunities in the stock market, especially for people who are patient enough and wait for the price to come to them. Anyways, moving on from that. All right, iShares IGV. Again, we like to use this as an indicator for risk on. SaaSpocalypse happened, Anthropic came out with a bunch of stuff, and software was selling off, and it continued to sell off. All right. Year to date, still down at 17.81%. It looked like it was having a nice climb back up. and then, now it's kind of chopping sideways. All right. But I still don't think we're out of the weeds yet. Again, this conflict, as it continues to, just go on, this is going to have large ripple effects. And the administration right now, which we're going to be covering here in a minute, is the Trump administration is trying to find ways to keep energy prices low for the next 60 days. All right, so we're going to cover that. We saw silver sell off 4% on the day. All right, that was atrocious, 4% on the day. All right, over the last month, down 19.17% year to date, still up about 5%. So not too bad, 4.5%, not too bad. Again, you had this really bad drop. And it's just been chopping sideways. Gold, where's gold? Gold, you would think would be doing really well right now. It's not. And it continues not to do really well. Again, this is just very odd. There's still a lot of central banks that are piling up on gold. Paper gold is, you would think that because of all the geopolitical unrest that gold would actually be doing well, but it has not, and people have been flocking more to Bitcoin, right? So we see Bitcoin actually doing still up, right? Still above 70. So that's good. As long as Bitcoin can stay above 70, that's good for Bitcoin. But again, I think we're going to go much lower, probably sometime mid-March, and that's not based on any charts, no technical analysis. That's just what I'm hearing. All right. I think we're probably going to see a low sometime in, not March, in April, like heading into April, we'll probably see another leg down. But, that's fundamentally nothing has changed with Bitcoin, right? Nothing has changed fundamentally with gold, with silver, or even with the S&P 500, right? Companies are still crushing their earnings, and we're going to cover Micron here in a moment. So it's really just market sentiment that's driving a lot of this, right? Market is spooked. Market is worried. Nobody likes wars. Nobody likes uncertainty, and definitely nobody likes high energy prices. All right. So just checking in on the chat, because I see we have a lot of people joining us here. We have Sean saying PPI data inflation up for wholesale is up, 0.7% for Feb. All right. We also have Eric Mark saying good buying opportunity, just like April. Trump loves crashing the markets. I forgot to, I meant to do this. Let me see if I can find it really fast. Let's see. Oh man, I hope I can find it. I'll probably get in trouble by the YouTube gods. I always get like a nasty gram from them whenever I play these clips, especially on X. But you know what? We'll just go with this, right? We'll just go with this. All right. We are tired of all the winning. Definitely tired of all the winning. All right. Hopefully we can lose a little bit, because I would like to see, some green in my portfolio. We always talk about, getting red light therapy. You just have to open up your brokerage account. So that's what I've been getting, is a lot of red light therapy. Let's see. Let me get them off the screen. All right. So again, this is not a political channel. All right. Left, right. I don't care. All right. It's just humor. All right. So anyways, going back to this, literally only have two specks of green in my portfolio, MLPI and USOI. All right. USOI is a oil fund from Defiance. MLPI is from Neos. All right. Both are pretty decent funds. I know there's, I know Defiance has a really bad rep, but USOI seems like a pretty good play, especially for the energy sector right now, as we already know that oil is back above $107. All right. That is definitely not good. And welcome back, Sith Amordor. All right. We have Skeptic in the chat. Winners, consistent gains need to be studied. Yeah. I mean, you just look at MSTR. MSTR has just been chopping sideways like crazy these last couple of days, and definitely these last weeks. Right when you think, it's going to have this breakout because Bitcoin is moving up, it just seems to go back down. So, but winner is definitely a good play on an inverse for MSTR. You get a little bit of that, some of that income distribution, and you get some share price appreciation, right? Because MSTR certainly is not going anywhere. Again, if you believe in the Bitcoin the Bitcoin cycle, right, 4-year cycle, whatever it is, then we probably won't see anything from MSTR maybe until October. We'll see the bumps, up, maybe a relief rally here or there. But, if the 4-year cycle holds absolutely true, then we will not see we'll see the absolute low in October before we climb higher. So anyways, moving on from that, we also have Sean saying my MU is up 600% since I bought the dip last April. Man, that is awesome to hear. Congratulations. That is awesome. Let's see. Vessel got hit on the Strait of Hormuz. LNG going up. VG is a play here. Yep. I remember hearing about VG. We covered VG very briefly. I heard about it on Amit Investing's channel. And he's not even sure why he bought it. He bought it on a whim, didn't do any DD on it. But I looked at VG myself. I thought about dumping in as a lottery ticket, and I just never did. But VG is definitely a play. It's a play on shipping. Let's see. Venture Global with Qatar shut down on LNG. Yep, we're going to be covering that here in a moment in our geopolitics segment of this stream. And let's see. How dare y'all start without me? Hey, welcome back, Super Straight Guy. Welcome back. All right. Let's see what else we got. Red light therapy. Hell yeah, man. Hey, sometimes you need that red light therapy, right? For the skin. Just open up your brokerage account. Well, for me, I just open up my brokerage account. All right. I don't want to speak for some of you sidewinders out there, you traders and you people with, all green portfolios. You guys can go kick rocks without sandals. I'm just kidding, of course. All right. We also have Sergio in the chat, dropping the news like it's hot. Hello, everyone. Hey, welcome back. All right. All right. So let's get into our first big piece of news, and that is coming from Kurv. All right, Kurv is actually going to be dropping 2 new ETFs in the near future. We'll probably see it maybe within the next, 2 to 3 months. That's usually how long it takes for these ETFs to drop. But we have gold mining. All right, gold mining and silver mining. This is this is awesome. Happy to see this because Kurv currently only has, ETFs for gold and for silver, right? The actual spot price ETFs. And I was really hoping that they would come out with something for the miners because I think that would be, there's an audience obviously for it, right? They have these 2 ETFs right here. They have the gold and they also have silver right here. And they have K-Cop, right? They have copper as well. But yes, they're coming out with the mining ETFs, which is, awesome because these mining ETFs, they are in some, I don't know, I don't want to say that word, but they are in some stuff right now. They have been trending down and then chopping sideways these last couple of weeks. I pretty much exited my GDX for a gain, and I didn't want to take the pain anymore. I'll probably hop back in later, but I do like that Kurv is coming out with this. All right. I'm not going to deep dive the prospectus, guys, because it's pretty obvious what this is, what this product is, and what they're going to be doing with it. All right. The link to this prospectus is down in the show notes in case you want to look at it. Right. They got the cover call writing, uncover call and or put writing. All right, these are the different strategies: call and put spreads, risk reversals, protective callers, protective puts, call purchases. All right, I'm not going to go in depth on each of these different strategies. You guys can spend the time and read this yourself. But I do like, that Kurv is coming out with these. All right. I think it is a big deal. Kurv is really smashing it too. They're really coming out with some banger ETFs, in my opinion. Sorry, guys, I got to get my coffee in. All right, I had a late start. And I had to rush this news stream in order to get some of this stuff committed to memory. And I did not have time to even sip my coffee. So this is actually my first cup of coffee right here. Amazing how busy you get in the morning. All right. So that was some big news coming out of Kurv. Again, we can expect this ETF to probably drop in the next couple of months. Again, 2 to 3 months. Usually is when they drop after the prospectus has become publicly available. If history is any teacher to us, Kurv, fantastic fund manager. They really eat their own cooking too. Howard does own his own ETFs, as far as I know. I could be wrong on that, but as far as I know, and as I've heard, he actually does have some of these in his own portfolio, his own personal portfolio. So if you're a fan of Kurv, you'll definitely like this, especially as this continues to play on the whole commodity, super cycle, right? That is what these are. That is, the K-Cops, the KGLDs, the K-Sills. They're playing on this commodity super cycle, right? Silver, industrial metal, copper, definitely an industrial metal. You can't have data centers. You can't have a lot of electricity without copper. So this, even though the price is down right now, fundamentally, the story behind copper and silver is still there. Right. We just had, I can't remember, the Chinese company just dropped their version of the solid state battery. You have Samsung that's developing their own solid state battery. That's going to require silver. And, you still have solar panels as well that need a lot of silver in them. So actually, real quick, let me see if I can find it real fast, because I did see Skeptic drop some interesting thing about silver in the, was it in commodities? It was probably in the Discord. So I thought this was cool. Let's see. All right, that's the 1 gigawatt for power. Let's see. Silver. Yeah, let's see if we can open this bad boy. Boom. All right. So Again, I'm just going to share this. All right. This is just neat. You guys can check out these mining visuals. All right. In gold, we trust. That's pretty cool. But this is why silver is so important. Right. And the miners, again, we covered this in a previous stream where the miners right now are being priced on silver at they're being priced at silver before the big spike, right? Before the big spike. So once the market prices in silver at these new levels, the miners are going to get repriced and re-rated, and that will be definitely bullish for these mining companies. So, anyways, that was the big news coming out of Kurv. We also had from BlackRock. All right, BlackRock dropped this. I did not cover it in the previous stream because I was away for a bit. I was away from the desk, but they dropped Ethb. So FA is their pure spot price Ethereum ETF. And then they dropped the iShares staked Ethereum trust. So now this is Ethereum with staking all-in-one ETF FB. All right. So this was a huge deal, similar to like their IBIT. They actually saw a lot of inflows into this ETF. All right. This is one of their more successful ETF launches. All right. So this was also a big deal right here. They actually ended up changing some of this because they were going to stake. They're going to be basically take more money, in terms of fee, but they actually lowered that fee by quite a bit. So they're right now for the first 12 months, commencing March 12, 2026, that fee will be only 12% of the net asset value. All right, for the first $2.5 billion of the trust assets. All right, so that was kind of nice of BlackRock for doing that. So FB, you can get some monthly income from this. All right, it's probably going to be in the 2 to 3% range as far as like a yield, because that is like what the industry standard is for staking for Ethereum, as far as I know. So you don't really have to look too far to figure that out. You just Google or hop on Gemini, ChatGPT, ask it what is the latest staking rate for Ethereum. So that is that, right? So if you're looking for Ethereum exposure with, some type of income, some type of dividend payout, then this ETF could fit that bill quite nicely, right? Before the ETFs, before FA, before FB, you would have to buy Ethereum and then actually stake it yourself. And, for the less technical people, who wants to do that, right? Not your coins, not your wallet, et cetera, all that stuff. You guys understand that. But, the beauty of these ETFs, especially from BlackRock, is that they do it all for you. They custodian the coins for you. They take care of all that stuff. And all you got to do is just buy with a click of a button an ETF, and it does all of these cool things for you. So this will definitely be one of their more successful funds that they've launched. As a matter of fact, let's see what they have as far as assets. So they're going to be paying monthly. Where is their AUM? Right here. So right now they're up to $254 million as of March 18th. And again, this fund only launched about a week ago, and they're already up to $254 million. So they won't be far from $1 billion over the next couple of months. For BlackRock's IBIT, they got billion status really, really quickly. It was their best performing asset, or excuse me, their best performing ETF ever launched. So we'll see. Again, so for anyone who likes Ethereum, wants to stake Ethereum, wants it in an ETF wrapper, this is something you could consider. All right, so we're going to be moving into our geopolitics segment of this stream. All right, so shout out to the 33 viewers on X and to the 34 viewers on YouTube. Make sure you guys hit that like and subscribe or follow if you guys like this content. All right, moving on. So we have this one. All right, first, before I even continue, all right, Republican, Democrat, I don't care. This is a politics-free channel. We just look at the news and look at it objectively so we can understand what's happening to our portfolios, right, and how it impacts the stock market. Okay, one of my big theses is for Bitcoin specifically and for gold, right, is that the United States is going to print their way out of whatever emergency they got going on. Okay. And this is just further proof of that thesis. Okay. So right now, and again, this is all preliminary. This could change later on. This could change within the next hour or two. Right. But the Pentagon is looking for more than $200 billion in budget requests for the Iran war. The Pentagon already spent, the Department of War already spent around $11 billion in the span of just a couple of days. All right. Launching missiles, having the ships on site. All that stuff, right? So now they're requesting $200 billion. So this, leads me to believe that, again, when we talk about this gradual print this big, print quantitative easing, that type of stuff. I mean, this is money that's flooding into the market. Okay, this hasn't been approved yet. This is all still, breaking news. This happened just a couple hours ago, but this is a big deal. So this tells me that there is a potential, if this was to get approved, that this conflict is going to be prolonged. Okay, this is going to be a prolonged conflict. Nobody wants another war. Nobody wants boots on ground. Nobody wants uncertainty in the energy markets, right? Because that could lead and have bigger ripple effects across the world, right? You already see the Trump administration lifting sanctions for Russia, saying, hey, you guys can sell your oil. We lift the sanctions on you guys. Russia's going to use that money to continue their war with Ukraine. And then you also have India buying, oil from Russia. Now you have China, right? China is supporting, and Russia is supporting Iran in their defense against the United States aggression, et cetera, right? So this conflict is just going to continue. When you talk about circular financing, this is circular war financing, right? This is crazy what is happening. But one of my biggest theses for Bitcoin and the debasement trade is that, again, we're going to have this gradual print, this continued, just injection of money. And this is not so much the main catalyst, but this is more or less a signal if this does get approved. Okay. Because whenever wars start, we had the Middle Eastern war, right? Iraq, Afghanistan, the Feds, lowered interest rates. Of course, we had other stuff going on around that same time as well, but you still had to fund that wars, fund those conflicts, right? So more money gets put into circulation, and we see that the M2 money supply just continuing to tick up a little bit higher. So not good for fiat, right? For fiat currency, but this could be bullish for Bitcoin. This could be bullish for gold, all right? Because again, those two are going to be inflation hedges. Those two are going to be your defense against, fiat debasement, right? So at least that's my thesis, all right? I'm sure people might have a difference of opinion. Put it down in the chat and we can certainly talk about it. All right, so oil jumps 4% as Iranian retaliatory strikes on Qatar's key energy facility stokes supply worries. And they already struck it, right? They already struck it. It's already happened. So basically, like I mentioned at the beginning of the stream, you had Iran that was putting out a warning saying, hey, since, we got attacked and one of our energy infrastructures facilities was attacked and destroyed, we're instead of attacking the United States, we're just going to attack the neighboring partners, right? Because the neighboring partners want to see this conflict come to an end, and they want the U.S. to hurry up and do it, right? So there's pressure from that side. So with that happening, Iran, basically told these governments in Saudi Arabia and Qatar, hey, you might want to evacuate some people from your facilities, right before we strike it. So they ended up striking them, and this is causing more bad ripple effects, okay? So oil jumped after Iranian strikes damaged Qatar's key LNG export facility. This facility is a huge deal in the markets. All right. I cannot overemphasize how big that hit is and how big it was and the ripple effects of this. Okay. Ras Laffan hit with extensive damage, raising risks to global gas supply. All right. I'm not going to get into the article too deep here, but just real quick, oil prices extended gains as Middle East remains on the boil with strikes on energy infrastructure in the region, fanning fears of a supply crunch. All right, Qatar said Wednesday that Iranian missile strikes had damaged a key LNG export facility. The action followed Tehran's warning about attacking energy facilities in Qatar, Saudi Arabia, and the UAE after Israel bombed a natural gas processing facility in Iran. Iran missile strikes inflicted extensive damage on Ras Laffan Industrial City, the world's largest LNG export facility in the world. The world's largest LNG export facility in the world. All right, so we're doing damage to ourselves that's going to last weeks, if not months. All right. So Vice President Vance to meet with oil industry as White House plans more actions to address the fuel problems. Okay. Fuel prices. So actually, we'll just get into the article. Vice President J.D. Vance and Energy Secretary Chris Wright will meet Thursday with the oil industry as the White House looks for ways to address surging fuel prices. The attendees will discuss supporting reliable energy amid global volatility. Spokesman for API told CNBC. Vance said Wednesday that the White House will announce additional measures in the next 24 to 48 hours. So we could probably hear something by Friday. We know how this goes too. Usually there's bad news on Friday, right? So we'll see if there's even more. I mean, I don't know how much more bad news you can get with what's happening, but we'll probably hear even more bad news on Friday and then probably something on Monday, right, to try and get the markets to pump up. But I don't know, guys. I think this is a huge miscalculation on the coalition's side, right, to attack Iran. Of course, that's just a personal thought out there, okay? Because the partners in the area, the GCC, with their energy infrastructure is being attacked, I'm sure they are not happy. All right. So anyways, Trump waives the Jones Act shipping rules for 60 days to steady the oil markets. This is basically the net of this is any shipping that was coming into the United States had to be from American shipping. But by lifting this Jones Act, now any country's ship can come into the United States and drop off its oil, right? The temporary suspension of the Jones Act will allow vital resources like oil, natural gas, fertilizer, and coal to flow freely to U.S. ports for 60 days. Again, this is what we can expect, at least for the next couple of weeks, next couple of months. White House Press Secretary Caroline Leavitt said in a statement, the Trump administration remains committed to continuing to strengthen our critical supply chains. All right. So that is what we got going on in the broader world in geopolitics land. As we can see from futures, you guys can see energy futures has just been spiking up. Oil has been climbing. All right. Again, look at oil at 111 right now. Crude oil Brent. Okay. At 111. So if this move is going to help or not, we were supposed to get some type of relief from the International Energy Agency, as well as, the G7 was supposed to release a bunch of their strategic reserves. I have not heard anything. I have not seen any updates on that. And even then, it probably is only going to be a temporary fix for maybe a couple of weeks, maybe a month or two, maybe less than that, right? If this conflict continues to prolong itself, energy, inflation, stock market, that's probably going to see some disaster there. Everything runs on oil. Electricity for data centers. All right. Electricity for data centers. Yes, you have other different energy sources, right? Nuclear, solar farms, all that stuff. But I mean, at the end of the day, most of it is running off of, oil, coal for the most part. So we're going to see, increasing electricity demand, right? The potential for that, which is not good, right? That's not good for data centers. That could be a problem for, just the AI trade itself, is this, bump in the road. So you also have China that's going through the same thing, right? China is also dealing with this energy crunch as well. And there was an interesting note, right? There's an interesting note that I heard about all this. And it was over dinner with a friend. So if you look at this from a global view, a global lens, right? I did not stop to think that the United States is actually one of the biggest exporters of oil. And you're damaging an area that is 20% of global supply, right? You put them in turmoil. So where is everyone going to flock to for oil? And that's kind of what I was thinking about, and why Tom Lee had mentioned that, high oil prices could be bullish for the United States. It didn't click with me, but now it's starting to make sense. This is just going to put further pressure on the rivals, Russia and China. So anyways, those are just my thoughts. I just wanted to share those. So this could be good for any oil heads out there who are looking to get into oil. Probably run it as a swing trade. I would not invest in anything, me personally, in oil, because I just don't understand the commodity enough. I'm waiting for this, choppiness, this market to kind of, this volatility to subside, because I would like to hop back into, GDX or something else, right? If the Kurv ETFs drop, I actually might consider those as well. Those would actually be pretty cool, because Kurv has been really good for a lot of people and they have a really good reputation. So definitely something I'd consider for myself. Okay, so moving on from this. All right, this is all the geopolitics stuff happening. Let me just check the chat here. All right, my oil and gas stocks are doing good, says Sean. Congratulations. Let's see what we have here. Jay Powell gave us a flat news today. Yeah, it was definitely kind of flat. And then we also have what happened to the Venezuela oil. I thought Trump took that over. Yeah, there was some news about Venezuela oil. I don't have the articles handy. I didn't even read the articles. I saw the headlines that one, there was Venezuela oil was starting to ship into the United States, if I recall correctly. But that oil is not like, so there's different types of oil. that particular oil is close to like street tar, right? Or tar for a building. Like it's really rough tar. So they have to refine it. They have to purify it, I suppose, and make it usable, right? So that oil, takes energy to make energy. So for that oil to come over the United States and get utilized, it's not something that just happens overnight. They still have to refine that oil. Let's see. Citizen of the Year. How will this impact the Dow, right? How will this impact the Dow? All right, you know that. There we go, right there. Does anyone know if the Dow is over 50K? Let's see. I ran from Iraq, says Sean. Let's see. From Sith Immortal, Kurv is my favorite gold and silver. All right, guys. So we're going to move on past this propaganda stuff, as Citizen of the Year says, and we're going to move on to our market news. All right, so this will end our geopolitics segment for this stream. All right, NASDAQ receives the SEC nod for trading in tokenized securities. This was just more of a blip, all right, more of just a headline. I mean, there's really not much in this, but I think this is, again, a step in the direction, right? Crypto adoption, that kind of stuff. We already covered this a little bit. We covered this when it was first announced, and they're going to be building some of it on the Ethereum rail, right, on the Ethereum blockchain. So people out there, Citizen of the Year is one of them, that believes crypto is nothing. It has no use case. Yet here we are, right? The NASDAQ is receiving the SEC nod for trading in tokenized securities. So take that. All right, so we're going to listen to, so yesterday we covered from Paul Atkins, the SEC chair, this whole digital asset taxonomy, right? A classification system that they're going to be using. So this is just some clarification on what he was talking about yesterday. Again, we referred to that, or we had that stream yesterday, and we covered basically that whole speech that he had. So let's listen in on what the clarification is.
The SEC clarifying its position on crypto assets, interpreting digital commodities, digital collectibles, digital tools, and stablecoins not to be securities. The SEC Chairman Paul Atkins joins us live from Washington this morning. This is a pivot of sorts. Help us understand, and we'll probably get into the weeds of it all in terms of just the mechanism for all of this, but how you landed on this decision and what it means.
Oh, well, thank you, Andrew. It's great to see you again. And this follows up on some of our prior conversations about this and other topics when you've been gracious enough to have me on your show. So thank you very much. But first of all, yes, yesterday was a real break with the past, a formal break. The Commission came out for the first time with an interpretative release that really sets a line between what are commodities in the digital asset space and what are securities. And the significance also about this particular release that we did is that the CFTC participated with us in it. And so they had some guidance that's included in that release along with our interpretation. So basically, as you said, and that tripped off your tongue very well, so it's very good, we are outlining 4 types of assets that are not securities. And those are digital commodities, digital tools, digital collectibles, and stable coins. And stable coins per the Genius Act that was enacted last year. So we're breaking with the past. We are now giving clarity from the SEC's perspective as to what are and are not securities.
Okay, so it's funny, as I was looking through the list, the one I wanted to actually focus on, oddly enough, was digital collectibles, because I could see how a digital collectible, perhaps more than the other 3, could be considered a security depending on how it's structured.
Well, that's true with anything. And so this is also what this interpretation lays out, is we're looking at, there's an old case from 1946 before the Supreme Court. It was called SEC versus Howey, and it had to do about orange groves and that sort of thing. But today, obviously with digital assets, those principles apply. But what we are focusing on is what makes an investment contract, which means what makes a security. And we're focusing on the promises and the representations that the people who are constructing it make to their purchasers, their investors. And so some of these collectibles, like a baseball card, an equivalent, a meme, one of these meme coins or things like that, NFTs, non-fungible tokens. Those are something that somebody buys. It's an immutable purchase that someone has given, and the token is what's set aside and collected, and it's not something like another asset where people are trading it, and there's an ecosystem around that.
So what, just to define it for the audience, what is a digital security then in your mind, which you would regulate?
Well, digital security goes back to what is an investment contract, and that is a set of promises that the developer of that particular instrument has made to investors as to how it will be managed and what what rights they have to that particular in that particular investment contract, and how they expect to make money off of it. So it's more than just something that is sold as a thing to hold or collect. It's more than a tool, like a ticket or something like that, a secondary ticket for a box office or whatever. And
what happens let me ask you this, just because this may be the future, or people talk about it being the future. You buy a digital ticket or a digital card that is a collectible, but also 10% of it gives you some kind of stake in the future of the business as well. Is now that a security all of a sudden?
Well, so you're talking about there are things that are somebody's putting money into an investment that is an ongoing enterprise where people are supporting that and managing it. So this a facts and circumstances case. What we have done is set out all sorts of examples in this particular interpretative release, and setting up a process and a framework by which people can have certainty. Their lawyers can give them an opinion. They can come in and talk to us about things if they are unclear. And unlike in the past, they won't then go home after they've talked to the SEC and find a subpoena on their doorstep or something like that. Right. So we're setting up a framework. This is just an interpretation, and so courts can deviate from that, of course, if they don't like our rationale. But what we're also going to follow up with here shortly is a proposed rule that will put a lot of this into effect and be much more specific, construct a series of exemptions and equivalent of a sandbox for people to do experimentation to see if they can develop a proof of concept and then go forward with what their product might be.
So the big one from this, the big thing from this not Clarity Act, but that SEC Atkins had talked about yesterday was that Bitcoin is not going to be treated as a security, right? That was a big deal, at least in my opinion, right? It's going to be treated like it's always been treated. It's your own personal property. It's going to be taxed accordingly, right? Again, this whole thing with all these cryptos and what is a security, what's a commodity, really at the end of the day, it's just how does the government get their piece, right? How does the government get their piece of the pie? How is it going to be taxed, right? That's really the ultimate goal for a lot of this, and a lot of people, especially, the diehard, crypto, people that I've heard speaking of the big thing, or even I've met in person, their big thing is just not getting taxed on their crypto gains, right? That's their biggest thing. They want to be able to use digital money anywhere in the world, not be able to get taxed on it, right? Not be, burdened with KYC, know your customer, audits and tracking for all your money to be anonymous. But this is a step in the right direction, at least for probably the mainstream, people, retail investors like myself. I get the whole Bitcoin standard and Bitcoin being the reserve currency of the world in the future. I don't know if I really align with that personally, but at least now I know how I'm going to get taxed in case I end up selling it, right? And at least that's a better position for me. So anyways, a lot more to come from this, right? Right now, the Clarity Act is still being wrestled with. And the big thing is the banks, they want these stablecoin issuers to be treated like banks. They need to go through the same regulations that banks do. And again, Jamie Dimon, I talk about this probably all the time now. Jamie Dimon was like, oh, I want there to be a fair playing field. Well, bankers have never played on a fair field at all, right? They have huge lobbying groups in Washington, etc. Anyways, I saw a comment here before I move on to my next piece here. I did see a comment here. All right. I like OVF better than OVL, but this one was coming from Remarked. All right. Have you looked into the OVL or Oval ETF? Does puts instead of cover calls on the S&P 500, pays monthly, actually outperform the index? And I will say that I have been looking at it myself personally. I will give a shout out to Income Architect because he is the one that put me onto it. And he did just release a video today that goes over it. And honestly, in my own personal opinion, I am looking at OVL as well. I'm just waiting for that big dip to happen. I really want that big dip to happen, so then I could just pick up OVL on the cheap. I don't want to buy now. I don't have a need to deploy any cash right now. So I'm just doing like these tiny little swing trades here and there. But I have no real desire to open up a brand new, income-based ETF. But I do like OVL because it's index-based. It's based on the S&P 500. They are targeting a 10.5% distribution yield, which is that's a pretty nice juicy yield. In the past, on price return, they've beaten VU, which is a big deal, right? On total return, they've done very well as well. And he kind of covers what could potentially happen now that it's producing a 10.5% yield. And I'm waiting for him to probably bring on the fund manager at some point. I would definitely like to hear from the fund manager directly on what he has to say. Again, check out his video, check out his channel if you guys haven't. Checked them out at all, but I definitely already saw this video and I thought it was pretty good. And it's just a little more insight into OVL, right? Which is, just basically an income fund for the S&P 500. All right. So that is that. Let me see what else we got here. Yeah, that was the other big deal, was that it does not limit upside, right? It does not limit upside for OVL. Which is obviously attractive, right? That's what we want. We don't want capped upside. I think a lot of us are done with the cover call ETFs. I still hold XPay. I like XPay. All right. XPay is my thing. I don't think I'll be getting out of XPay anytime soon, but a lot of people kind of woken up to it. And, the high yield distributions, people just don't like it. They'd rather have safer assets, whatever that means, right? They'd rather have safer ETFs that produce a lower distribution yield, but it can still grow in price. Let's see what else we have here. Farouk, man, welcome back, man. I haven't seen you in a little bit. Hey, welcome back. The Unclarity Act, says Farouk. Absolutely, 100%. Waiting for that thing to drop. All right, moving on. Now we're going to be talking about the Federal Reserve. All right, Fed votes to hold rates steady, notes uncertain impacts from the Iran war. The Federal Reserve, or the Federal Open Market Committee, or the FOMC, voted 11-1 to keep the benchmark federal funds rate anchored in a range between 3.5% to 3.75%. I can only guess who this one would be, right? Last name probably is Mirin. All right, the policymakers are navigating their way through higher than expected inflation readings, mixed signs on the labor market and the war. In its post-meeting statement, the Fed made a few changes to its view on the economy, with a slightly faster pace for growth and higher inflation projections for the full year. All right. Keyword: inflation projections. Now we're starting to see these words pop up. Don't be surprised if we start hearing recession, right? Recession is going to be the next words we hear coming later this year. I did see that there was not a Kalshi bet, but I think it was a bank that's projecting a 45% recession later in the later half of 26 and probably 27. So again, that word recession is starting to rear its ugly face here again, right? So anyways, let's see what else we got. So anyways, let's listen to the full thing, all right? So I know this might bore you guys. You guys might fall asleep, but I haven't really listened to the whole thing, and I like to listen to Jerome Powell whenever he speaks, especially when he does these press conferences, so I can hear it for myself, what he has to say. So this is a 5-minute clip, a 5.5-minute clip. So sorry if this does bore you guys. All right, so let's listen in on what he had to say about the economy, the interest rate, and kind of what the Fed is thinking overall on the entire economy. So,
all right, here we go. This is Fed Chair Jerome Powell taking the podium.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months, and inflation remains somewhat elevated. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. The implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. and I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. In our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. From last September through December, we lowered our policy rate 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people.
So just real quick, in case you guys didn't know, but I believe Jerome Powell is out of the hot water when it comes to, you know, that lawsuit or whatever, the subpoena. I did see an article saying that, you know, the judge basically ruled that it was a nothing burger, you know, especially when it came to the cost overruns for the Federal Reserve, you know, rebuilding or whatever it was that, you know, he was getting in trouble for. So he's out of the hot water. Nothing wrong with, they found no wrongdoing, and you know, life just continues on trucking. So anyways, some of the key points that he did bring up. All right, so rates are being held steady, 3.5 to 3.75. All right, so they're not doing anything. Right, we already knew that this was happening. Okay, so again, don't be surprised by that. He said that the economy, the growth is looking good. Consumer business spending is looking strong. Housing, of course, is looking weak. You know, you still have builders that can't build because the costs of building cost too much, right? And then you also have, you know, people not buying any properties right now because the interest rate's too high, right? The interest rate is still very high, so people are not purchasing anything right now. People are still choosing to rent versus buy. Labor, you have unemployment at 4.4%. Again, we know that at least in the 4 to 4.5 range of unemployment, that's about as healthy as you can get. When that number starts ticking up higher, that's when, you know, things start to get a little more worrisome. He did mention that job growth is slowing. We already knew this from the past, you know, a couple of readings, that the labor market is starting to show cracks. Part of that is due to, you know, the AI disruption in a lot of these different sectors. But it's also probably, you know, companies just having to downsize, right? Having to downsize. We also see that PCE came in at 2.8%. Core came in at 3%, right? That was above target. Oil, tariffs, creating upside pressure. Long-term expectations, they keeping it anchored. Let's see. He also mentioned that the Middle East the Middle East, you know, stuff is still the biggest wild card in all of this. There's still a lot of uncertainty. We already know that. We've covered, you know, this that stuff on this stream quite a bit. You know, we won the war. We'll wait until objectives are achieved, and then Iran is not, you know, capitulating. They're saying they don't want, you know, they don't want a ceasefire, right? And they're not going to let the United States just dictate when that ceasefire happens. So Iran is in it for the long game, all right? And if they can continue pressuring allies, the GCC in that area, and that's going to continue disrupting, you know, energy, right? That's going to continue disrupting oil. All right, so and he did mention that you know, if oil stays at higher prices, like we already spoke about, that could create inflation pressure, right? That could create, if it stays sustained. So this was more or less a hawkish kind of view, right? A hawkish perspective from the Fed. So that's not good, right? Not turning dovish. Some key points, just mentioning that the economy is doing really well. Inflation is still very sticky. We already know that because inflation, you know, according to the readings, is not come down. As a matter of fact, moving on from this and looking at trueflation, we do see that trueflation is starting to tick back up now, right? If we look at the last month, it was down in under 1% and it's starting to tick back up. Okay, so I like to look at trueflation. You know, when it comes to inflation readings, it's just using more data, more live data versus looking backwards like the government does. And Scott Bessent, Wall Street, they all have looked at or mentioned trueflation as a better reading versus the actual like BLS numbers. So absolutely crazy what's going on. The Fed is going to be on pause. They're paralyzed. They can't really move. They're still expecting rate cuts later this year and into 2027. And of course, the market is expecting more rate cuts this year, more than one, right? Once Kevin Warsh gets put into the seat. So because Kevin Warsh would not have been nominated unless he was already aligned to, you know, the Trump administration's goal of getting interest rates lower, so they could refinance that debt. You know, we're paying, well, when I say we, I mean the U.S. government is paying $1.2 to $1.3 trillion in interest on the debt that is owed. So they want to refinance at a lower rate. So a lot of crazy crap happening there, guys. All right, so we're pretty much close to the top of the hour. I'm going to try to breeze through these last couple of items here. All right, gold and silver extend losses. Fed keeps rates on hold. We kind of already saw that. I actually didn't even have a chance to read this article. Now that I'm looking at it, Fed Chair Powell said it is important to keep interest rates mildly restrictive, and the Fed added a new sentence to its guidance stating that the economic implications of the conflict in the Middle East were uncertain. Precious metals had already dropped sharply as energy prices surged with the Iran war intensifying, and the U.S. Producer Price Index, which tracks the change in wholesale prices, rising by a hotter than expected 0.7% in February, adding to speculation that the Fed will hold off on cutting interest rates this year. Again, gold should be doing well right now. It absolutely should be doing well right now, but it's not. All right. Price is just not founded. The market just is not pricing that in, or maybe the market has priced it in and they just don't care. They're swapping it out for something like Bitcoin, which again is just, it's hard to believe. But anyways, moving on from that, we have Micron. All right. Micron earnings. Again, I didn't even have a chance to go through this article, so this is going to be new for me. All right. But anyways, Micron slides even as Q2 results guidance below past forecast on AI strength. So I know Micron had a blowout earnings because you can see their big jump right here. Let me see if I can find a quick chart on MU. Let's see, MU. Micron Technology. All right. I'm surprised I don't have this. Oh, actually, it did not. That's not cool. All right. So we could just take a quick look here. So this is for the week. Let's see what the day was. So it looks like it sold off, right? Just like any other software tech company that has great earnings, it sells off anyway. So let's see why the market sold off. All right. So Micron shares fell around 3.5% in extended trading on Wednesday, even as the memory maker reported fiscal quarter results and guidance that topped Wall Street's estimates by a wide margin. So they beat and they still got sold off. Let's see what they had for the period ending February 26th. Micron said it earned an adjusted $12.20 per share as revenue soared 196.4% year over year to $23.86 billion. Their revenue is soaring. They're doing really well, and their stock is still selling off. Operating income during the period was $16.12 billion, while cash flow from operations was $11.9 billion compared to the $3.94 billion in from a year ago. That is crazy. That is $7 billion in addition of cash flow, in additional cash flow. That is crazy. Micron set new records across revenue, gross margins, EPS, free cash flow in fiscal Q2, driven by a strong demand environment, tight industry supply, and our strong execution. And we expect significant records again in fiscal Q3, said Sanjay Mehrotra, chairman, president, and CEO of Micron Technology. In an AI era, memory has become a strategic asset for our customers, and we are investing in our global manufacturing footprint to support their growing demand, reflecting confidence in the sustained strength of our business. Our board has approved a 30% increase in our quarterly dividend. Absolutely insane. So we see Micron is killing it, right? We've talked about Micron a lot. You have the three big ones out there. You have Micron, SK Hynix, and Samsung Electronics. These are producers of that specialty RAM, right? That specialty DRAM. And NVIDIA, AMD, some of these other semiconductor companies are just eating up that memory, right? They basically have a backlog. Any new chip that they produce has already been sold. So that's a big deal. That is a huge deal for companies like Micron. You also have SanDisk out there. I don't think people talk about SanDisk enough, myself included, because I don't even follow that company, but I was surprised that they're doing extremely well. Their stock is not closely following Micron, but they're another memory maker. And over the last year, they had a crazy spike up. I mean, you guys can see it right there, right? Crazy spike. So they're doing also very well. So if anyone was able to buy the dip that happened probably around here, back down to the 580s, or excuse me, 527, congratulations if you were to pick up some shares, because it spiked back up to about 750. So that is good there. All right. Let's see what else we have. Oil extends gains as Iran inflicts extensive damage at world's largest LNG plant in Qatar. We already covered that. Red Cat, which is a drone company, right? Drone company for the Department of War, Department of Defense, whatever you want to call them these days. Their target scaling to 1,000 Black Widow drones monthly while expanding USV production 2026. I just wanted to look at what their earnings was. And again, they're ramping up, right? They're ramping up production. They're winning contracts. They're doing really well for drone production. and I can at least, I'm waiting on Ondas to release their results because I really want to hear what they have to say, because they've been crushing it. They've been on a merger acquisition spree these last couple of months, and they've been just killing it with winning contracts, which is a big deal, government contracts, right? But we can also see that warfare is changing. Warfare is changing to drones, and the U.S. military is definitely going to be buying up drones. So if you're someone that wants to play on themes, or probably theme is a better word, then something like drones, Ondas, Redcat, of course, do your own due diligence, could be a potential position in a portfolio. So let's see what we have here. So CEO Jeffrey Thompson reported on the company's significant advancements, stating that last year's extraordinary Q4 results, which annualized would be over 100 million. He described the launch and rapid development of the Blue Ops Maritime USV division, highlighting that a new factory in Georgia just went operational approximately 1 month ago, with full rate production tooling expected within the month. Thompson added that we believe we are confident that they can build over 100 plus USVs in 2026 as we ramp up production capability to thousands. Let's see. Thompson stated, we are not currently ready to offer official guidance. We want to have our government contracts in hand before we give guidance. We indicated that our company will update the market as soon as we have contracts in hand. So for finances, let's see what they got. Gross margin for the quarter was 4.2%. Operating expenses for 2025 was 67 million, and research and development expenses 17.9 million. Let's see what else we have. So analyst estimates, cautious optimism. So anyways, I just wanted to cover Redcat because I know they're always mentioned whenever drones come up, whenever drones come up for, the Department of War, Department of Defense, Redcat. But my money has and was on Ondas. I think Ondas is still a great company. I think it still has room to grow, especially with what they're doing and the technology that they have and that they're acquiring and that they're bringing into their product lineup. Just in my opinion, of course. We also have, all right, from Sergio, drones. All right, excuse me, not Sergio, from Serial Beggar, DRNZ from Rex, and that is a good one to bring up because I was actually about to look for that one. But yes, if you don't want to pick and choose the individual drone stocks, you can always look at an ETF version, and Rex actually does a pretty good job of that. So if you do want to pick individual stocks, you can also look at what they have. Like, they've already done most of the hard work for you, and as you guys can see, Ondas is right at the top, occupying 11 3/4 of the portfolio. All right, then you have Drone Shield, AeroVironment, all right, coming in at 10%, 8% respectively, and then you have Redcat down here at 7.5%. So this is a good ETF, of course. That's if you're in the thematic plays. I wouldn't call this a sector play; it's more or less a thematic play. But let's see how it actually has been doing, because I have not looked at this ETF in quite some time. I'm trying to use Robinhood more, the Robinhood Legend thing a little bit more. Try to add a little pizzazz to the production of this stream. Let's see. So for year to date, so this is why I don't like Robinhood Legends, because if I wanted to see like year to date or the 1 year performance, I don't see that anywhere on the screen. Like, I could just simply go to like a Google, a Google thing and pull it up, and it's going to pull up the chart, right? Something like this, right? I can at least see if I click on year to date, right? I mean, it hasn't been doing bad, all things considered. It's up 16%, and this launched last year. So, it hasn't done bad, all things considered. Let's see what else we got. Yep. YQQQ, which is a inverse yield max triple Q ETF, is starting to look good. And again, Qs aren't doing too hot right now. Everything looks like it's starting to go down. I thought about hopping into that myself. Me personally, I thought about it, but I don't want to, like, if I hop into something, it's like the juice, or excuse the squeeze has to be worth the juice, right? If I'm going to drop, like $1,000 into it, that's not really going to move the needle much, right? If I drop 5,000, it's still not going to move the needle much. If I drop 10, 15, 25, maybe it starts to look a little more interesting, but I don't want to do that. I don't want to use up most of my capital for that. Even though I am expecting, at least for me personally, even though I am expecting that this is going to be a grind lower scenario, I still don't want to, have 10,000 in that and then collect the distributions and all that other good stuff. To me, it's just it's not worth it. If I'm going to do something like that, it's going to be, especially since it's not going to be a permanent position, like, trying to call the bottom. You're going to have to be really good at that, right? When do you exit Y triple Q? But it is a good fund, especially if you think that the Qs are going to be dropping or that the broader market is going to be dropping, and you still want to be able to collect distributions on the way down on top of capital appreciation. Y triple Q is definitely a good ETF for that. So I would definitely agree with something like that. Let's see what else we have. Dang, look at this, Sergio. I bought SWMR Ukrainian drones at IPO release a couple of days ago at around $10. It is now over $55 and pumping. Can we see that here? Let's see if we can see that here. SWMR. Swarmer. Damn, well, thanks for the heads up, bro. Thanks for the heads up. Look at those two green cans. God, look at that. Oh, let's see if we do a week now. Oh man, that is a chart you love to see right there. Yeah, that is a chart you love to see right there. Yep. Congratulations on an excellent pick. Let's see what else we have. Yep. There's also Jedi, the Defiance drone and modern warfare ETF. Yeah, that is true. Let's take a look at that one real fast. But first, before I continue, shout out to the 72 viewers on X and the 31 viewers on YouTube. Appreciate you guys. Appreciate your support. Don't forget to hit that like, subscribe if you like this type of content. All right. It lets me know that this content is at least helpful or at least entertaining. So let's see what else we got. Oh yeah, we're going to look at Jedi. So yeah, I don't know. Maybe I suck with Robinhood, but I gotta figure this out. I would like to use, Robinhood more, but let's see what Jedi has for us. So 8.66% on the year. This following more or less that drones ETF from Rex. Again, still not bad. I mean, it's still up. And you know what? We haven't looked at that QTUM ETF in a while. Let's see what Quantum is up to these days. All right, so this was Defiance's best fund in 2025 up until about October, November. Then everything sold off. But let's see how it's doing. It's only down 1.37%. That's actually pretty damn good. It is up 38%. Okay, so if you're someone that wants to play on the quantum story, quantum is coming faster than you might think, etc. I don't fully understand quantum. I know that's the biggest bear case against Bitcoin, but I'm seeing some pretty smart people in the space, in the Bitcoin space, saying that quantum, by the time quantum comes out, there's going to be quantum proof, wallets at that point. The Bitcoin developers are already going to have quantum proof wallets at that point. So, I don't know what to believe. I'm not a quantum guy. The book I read, Bitcoin 1 million, definitely recommend people check out that book. He had a whole section on quantum and the quantum bear case, and he just doesn't see it as something that's going to be able to break, the SHA-256 encryption that is on these wallets or on Bitcoin. So don't hold me to it. Do your own research, of course. I listened to another YouTuber, or not a YouTuber. He's a Bitcoin OG. His name's Arthur Hayes, if I'm not mistaken. And he basically just said, like quantum, it's going to come and go. People are just using it as FUD right now, but it's going to come and go, like whatever. That's for 10 years down the line for me to worry about. So I thought that was a really interesting perspective, at least coming from a Bitcoin OG. Let's see. Robinhood Social started 2 huge closed beta, shows buy sells and all. Will be fun to see who's really about that life. Blossom is going to lose a lot of people. I really think so. And I think this will be good, especially for those people on YouTube who just keep, talking about all these stocks and all these ETFs that people should buy. Meanwhile, they have zero skin in that game, right? Zero skin. It might be all in on VU or something, but they're hyping up going all in on Ulti, back in the day, or Misty, or, saying how all these high income yield funds are great. Meanwhile, having zero skin in the game. I think that is going to be an awesome feature. That's if they even join, right? That's if they even join, because on Blossom Social, you can actually manipulate the data for your portfolio. So you could, say you own 10,000 shares of an ETF or a stock, but that's a manual entry, right? You could connect your brokerage to it, and then disconnect it, and then just add, shares in there, right? So there's a lot of people out there that don't, share their portfolios. I've shared mine plenty of times. I haven't shared it recently just because I don't know. I don't like, I just don't. But yeah, that Robinhood Social stuff, I might sign up for that for sure. Like I look at X too. I look at X and people, I just can't keep up with that posting that these people do. You have channels or pages like High Yield Hustle, or I don't know, there's a bunch of them out there. You guys know who I'm talking about if you've been on X, but they're just constantly posting, and that's how more or less they make their money, like similar like YouTube, where you get paid per video. For them, it's you're getting paid per post. But man, I tried it once. I was like, I can't keep up. I can't do 100 posts a day. Like that's not something I'm interested in, man. I got life. I got other crap I'm worried about, or that I'm focused on. Like this stream, I'll do this stream for an hour. I'm happy to do the stream to chop it up with you guys. But after that, I'm done. I'm done with finance land. Like unless I'm listening to a podcast or something as I do a walk or something, or I'm cleaning the house or doing dishes. Like I am not, actively researching, ETFs and putting together a post and all this other stuff. I'm just not doing it. I'm not about that life anymore. Maybe one day, maybe I'll re-enter, later, and we'll start doing it. Skeptic, like I said, man, we need a co-host one day. We should do a co-host or something. Webull has better charts, says Eric Mark. And yes, I would agree with you, only because I know that Amit Investing, his channel, he uses Webull, and Webull is pretty nice. Well, I'm trying to use Robinhood to get used to it. I know you can start doing like some fancy charting on this now. Like you start having lines here and there, right? So instead of paying for something like TradingView, but people will say this is child's play compared to something like TradingView. And again, I don't even know how much I want to get into charting, because spending hundreds of hours doing charts, again, not something that's at the top of my priority list. So Sergio says he does, or Farouk, I don't see a slowdown with the conflict going on. Yeah, me neither. I'm in agreement. I think this conflict in the Middle East is going to continue for quite some time. Definitely at least a few more weeks. Sorry, brother. Usually it's Victor's fault. They think they have quantum proof wallets. Yeah, I mean, we'll find out soon, right? Because in the book Bitcoin 1 Million, he talks about how, because he was experimenting with quantum for some time because he wanted to understand the technology, and quantum does really great for 2 digits, up to 2 digits. Once it gets to 3, it just blows up. It doesn't work anymore, right? And don't ask me what the digits are and all that stuff. I'm guessing it's because in quantum, right? In before quantum, you could have on, you could have off, you could have 0, you could have 1. Nothing could both be turned on and off at the same time. But with quantum, the way it works is you have both 0 and 1 on at the same time. But then you start getting into the chips and how those chips work and how they are able to process data. Don't hold me to any of this. Do your own due diligence. I haven't gone down the rabbit hole, but he was saying, at least in the book, that he had used Amazon Web Services to try to spin up a couple quantum machines, and they could work up until 2 digits. Now, Bitcoin wallets and Bitcoin itself, they have SHA-256, right? So that's 256 characters that quantum would have to break, right? That string of code, but it's only up to 2 right now. Once it gets to 3, it just breaks. So in the future, will that happen? Will quantum get to that 256? I'm not sure. As well as I know that SHA-256 is one of the toughest encryptions, models out there, or technologies out there. But yeah, I mean, it's been a while since I looked at encryption models and all that stuff. Has anyone bought into RVI, Robinhood Ventures Fund 1? It's a CEF and currently trading at a discount to NAV. So this is the Robinhood Ventures Fund. I know Skeptic had a couple shares you bought on IPO, if I'm not mistaken. I have not purchased anything. I have not purchased the RVI ETF myself, or RVI stock, whatever it is. I just, when it comes to these like really private niche, Jesus, look at this. Look at this. This is crazy. Whenever it comes to these types of funds, I'm really iffy about, like, it might have exposure to stuff I don't really care about. So yeah, when it comes to these private funds, I don't like it. But this is like a private public fund, right? It's a venture capital fund. So they're able to invest in things like OpenAI or pre-IPO companies like Stripe. Huge is a streamer now, man. I'm a wannabe streamer. AI creates hallucinations. Quantum brings balance and validation together. They bring the beginning of AGI. Oh, look at you bringing together AGI. All right, ladies and gentlemen. Well, it's about 1 hour and 15 minutes that I've been streaming and chopping it up with you guys. I think that's going to do it for me. I hope you guys found some value, if not at least a little bit of entertainment from this stream. All right, but with that being said, like always, appreciate your support, and I will see you guys in the next stream. You guys have a great, wonderful day, night, afternoon, wherever you are in the world. All right, so you guys all take care, and thanks for joining.